Okay, we got the jobs report. The market started selling off ahead of that with the futures overnight, and we ended up gapping lower. We ended up selling up, but rebounding off of the lows. The NASDAQ actually closed positive for the session, the NASDAQ composite. The Dow was down 300 points, down 0.62%. The S&P was down 16 points, down 0.25%. The NASDAQ was up 0.23%. The Russell was down 0.45%, and the VIX was pretty much flat, down 0.12%. Now, we got the delayed jobs report after, again, the government was shut down. They're now playing catch up, getting out the economic data. We got the numbers for October and November combined in this report that we got before the market opened here. I've been warning you that we're going to get a big negative number. In June, we got a small negative number of negative 13,000. I told you a big negative number is coming. We got it, negative 105,000 for October. Now that was surrounding the government shutdown. Now the government shutdown, we talked from October 1st to November 12th. A little bit of the month of November. A pathetically weak number for November, just 64,000. This was a bad jobs report, and again, you're likely going to get more negative numbers going forward. This 64,000 may even be revised downward. It was expected that we were going to get 45,000. We did get a better number in that we got 64,000, but it's still a feeble number. 64,000 jobs created. The unemployment rate ticked up from, it was expected to come in at 4.5, came in at 4.6, higher than the 4.4, which I believe was the September number. This, I believe, is the September data. The data we just got was October, November, the jobs report numbers that we just got. When we started seeing the negative numbers, the big negative numbers, they remained negative. That 64,000 that we got for the November, it may end up getting revised down or just be very, very weak. The market going, well, the government shutdown's over, so sold off a little bit, but nothing to see here, nothing to see here. And I'm telling you, 2007, we started getting negative numbers. Every single number in 2008 was a negative number. And again, you started seeing hundreds of thousands of jobs being lost. You're going to see the same thing happen here as we move into recession. And you're seeing the warning signs, yet people dismiss them. We're going to get the CPI inflation data on Thursday. And again, if before the market opens, and if that comes in hot, there could be concerns about stagflation, where you have weakening economic data with a weakening economy and inflation on the rise. Eventually, we'll get a deflationary bust, but watching, if this report comes in hot, expect a sell-off. And even if it doesn't trigger a bigger sell-off, we still have the Bank of Japan raising rates on Friday. Again, in the past, that has been associated with sell-offs. Also, we have the Fed last week, which has essentially paused rate cuts, which could trigger a bigger sell-off. Right now, we're getting a post-Fed sell-off, at least so far, as I warned you, would likely be the case. And then next week, we'll move into holiday trading. We'll have Christmas. We'll have a short trading week, an abbreviated session the day after Christmas, and then the following week, we'll have the New Year's Day holiday. So again, you're going into lighter trading. We'll be watching. Markets can be manipulated up or down during those holidays. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you could take a moment to help out, I would really appreciate it. Just follow the link below. It'll take you to a secured site and you can donate any amount you want. And I just ask that you do that rather than having sponsors. They contact me all the time. I turn those offers down. I don't want to sell you anything, but I need to hear from you in order to make it work. If you could take a moment to do that, to help out, to step up to the plate and help out, I would really appreciate it. Thank you for your consideration for that. The risk model is starting to show signs of weakness in that we're seeing now the S&P trend try to turn here, and we're seeing the risk line turning bearish. but we're still in a risk-on environment. We got to move into a risk-off and see red here. That hasn't happened yet. So again, we'll be watching to see if the S&P takes out the 50-period moving average. Do we start seeing more and more signals turn bearish? Or do we bounce off that 50-period moving average? We got a doji today, a candle of indecision. But if we look at the NASDAQ 100 risk model, it has moved into a risk-off environment. We have seen the NASDAQ trend turn bearish. Again, last time we did that, we got a 9% sell-off. And we've seen NASDAQ 100 move into a risk-off environment. So if it remains that way, we remain below the 50-period moving average, then we could get a bigger sell-off. We'll be watching the November low this week and then going into the holidays. But everything right here in the risk model has turned bearish, at least for now. But NASDAQ 100 has to stay below the 50-period moving average and see more signals turn bearish. The VIX was down today. You got to get back above the 50, the green line, back above the 200, and then the 50's got to get back above the 200 if we're going to see volatility dramatically increase. We had a little bullish divergence here with the VIX previously at our recent low, where we moved to a lower low on the VIX, but you got a higher low on the stochastic, and now it's pushing above 20. And we've had those stochastics roll over on the NASDAQ and S&P, and now we're getting the MACDs roll over. Yes, the MACD rolled over yesterday on NASDAQ, today on the S&P 500. So if that begins to play out, the candle of indecision today could be a continuation doji we'll be watching. MACD's got to firm up and go positive if we're going to get back above the 50 and see volatility increase here on the VIX. S&P 500 had a divergence on indicators in the intraday time frame last week, and we had that divergence play out there on Friday. Rallied up on Monday to the 200 period here in the 5-minute time frame, got rejection, got a gap and trap in the intraday time frame, the 5-minute time frame here, sold off and then gapped lower for the session today. Tried to get some rallies back up, failed below the 50 period, finally got back above the 50 period and stalled and went and tested the 200 again, just like we did at the start of the session on Monday. The rally took us up to the 200 period on the 5-minute chart, the 50 period here on the 15-minute chart. 50's crossed below the 200, and again we had that divergence play out on the 5-minute chart, the 15-minute chart, and the 60-minute chart. Now just going back to the 5-minute, the bullish divergence is formed at the lows of the session today. That's given us a rally back up to the 200 here in the 5-minute time frame. And then I've marked here a bullish divergence that formed in the 15-minute time frame that's given us a rally back up here to the 50 and the cloud. Do we build upon this divergence and try to get a bigger rally? Or do we get rejection at the cloud here, rejection at the 50 and the 200 on the 5-minute chart? Again, we also had a divergence, bearish divergence on the 60-minute chart. There is no bullish divergence here on the 60-minute chart as far as the rally that we're getting back up. We're bouncing off the 200 period. The 50 is curling over, dropping. We're below the cloud. We validate a lower high and end up getting a lower low. But the divergence is so far giving us a sell-off, but there is no bullish divergence on the 60-minute chart. Only on the 5-minute chart, the 15-minute chart. So again, is that just a little intraday counter trend, or they play out, give us something bigger, and we go back to the 50 here and the cloud right now for a test here in the 60-minute time frame. Again, we were down 0.25% on the S&P. That gave us a doji, the sell-off, the rebound back up. It gave us a candle of indecision. The doji could be a reversal pattern or a continuation pattern. If it is a continuation, we need to take out the 50 period and the 20 period moving average. We came down to those levels and we bounced. But in getting the doji, you're also now getting a bearish MACD crossover, and The histogram has moved now into the negative region, which is the difference between the MACD line and the signal line. So again, that's getting the rollover. We had the rollover yesterday, the bearish cross yesterday on the NASDAQ 100, now the S&P. So are we confirming now a lower high? There's still the possibility that we still go get the 2022 scenario and still try to go higher, slam up into the channel of resistance. If we end up seeing a 2022 scenario where NASDAQ and S&P diverge from one another, we do have a smaller divergence that developed here in the more recent price action, but I'm talking about a bigger divergence with the previous highs from October. Neither the S&P or NASDAQ have been able to move above those levels. We had momentum shift with the S&P on Friday. We need to take out the 50-period moving average if we're going to get a bigger sell-off. Now the MACD is rolling over. Will that do it? Is it a continuation doji or a reversal doji? Could be either one. We'll be watching. You need to break the 50-period, the 20-period here, close below the 50-period. Have the MACD come down, close below the center line if we're going to get a move back down to test the lows here from late November. Momentum remains bearish. We continue to be below the 10 period, but we're bouncing out the 50, the green line, and the blue line, the 20 period moving average. NASDAQ 100 was up 0.25% today, up 66 points or so, rounding up. And then we have, again, the bearish MACD cross yesterday. Again, to get a bigger drop, you need to go negative on the Awesome Oscillator, the MACD. We are moving in the negative region here. We've dropped below 50 on the stochastic. We're at a reading of 39, and we've closed below the 50 and the 20. So you rallied back up towards them after closing below them yesterday. On Monday, we closed below them, rallied back up. We still got a red bar, even though we had an up day. The bar is reflecting the trend. We're below the 10 period moving average. We're rebounding back up to test the 50 and the 20. On NASDAQ, S&P gets a candle of indecision with the doji. NASDAQ daily chart here. Momentum signals are still bearish for the S&P. They've got to remain that way, and we've got to take out the 50-period moving average. NASDAQ has to remain below the 50-period moving average. They're in the daily time frame, but we get a doji today. Back on Friday, we had a reversal signal and bars flipped to bearish here. So we're seeing momentum turn, and it remains bearish as we are now in this week with the jobs report, the CPI that's coming, and the rate hike from the Bank of Japan. Same is true for the NASDAQ 100. We got a reversal signal. We topped, and then Friday bars flipped to bearish, and they're still bearish. So momentum's bearish. Drop below the 50-day moving average. NASDAQ coming back and filling this gap. We have to remain below the 50 period. See signals, momentum signals remain bearish, and see more trending signals begin to turn bearish. At the session lows for the NASDAQ 100, it had tried to flip the signal to bearish here, taking out the cloud, but it couldn't do it. It ended up closing positive and not being able to close below the cloud. So the signal here is still bullish. The S&P 500 came right down to just above the cloud, got the doji, and then rallied up and getting that candle of indecision. So again, if momentum signals remain bearish, we got to see trending signals all begin to flip back to bearish. Few of them have. Need to see them do it, all do it, and move back towards the November low to take it out for the month of December, to confirm the hanging man candlesticks in the monthly time frame. But other signals remain bearish, like here on the NASDAQ. Again, the signal did turn bearish right along with momentum. Trending signal here is bearish. But S&P 500 did get the signal here turning bearish today with the doji candlestick. We took out the cloud, the lower end of the cloud, and we remained below it by the end of the session. Even though we got the rebound back up, getting the doji, moving off the lows, it still turned bearish here on the S&P 500 daily chart. S&P is still bullish here, but at the lower end of the cloud, and NASDAQ remains bearish here never able to flip the cloud back to bullish. So again, you got mixed signals, but you've got to see more signals turn bearish. I have other signals that I don't have the time to show you that are still bullish. A couple have turned bearish. Here, the NASDAQ's remained bearish. So again, need to see everything flip back to bearish. S&P has to drop below the 50 period. NASDAQ has to remain below the 50 period in the daily time frame. Momentum signals have to remain bearish. If they flip back to bullish, then the risk is that we form the 2022 style top, which is still possible, as I said. Again, I'm not predicting that happens, but I'm telling you it is possible. Personally, I think we have a peak in October, but we've got to see the November low taken out for lower high, lower low, and begin a bigger sell-off. We move slightly higher, both the NASDAQ and S&P above the previous lower high that's set up, negating that lower high, lower low scenario. So now you got to start all over again. You got to take out these November lows. Watching by the end of December, do we confirm these hanging man candlesticks by closing below them here in the monthly time frame? You get 1 bar per month. So do we end up seeing the NASDAQ and S&P confirm these candles by closing below the November low? We've got these negative divergences going on in the monthly time frame. Here it is on the NASDAQ. So again, does that take us down to the trend line here towards the 50-month moving average? Do we see something happen that gives us a dramatic drop? And again, we're likely going to see volatility with the Japan raising rates, with the unwinding of the yen carry trade, forced selling of assets to pay back yen denominated loans. We're pushing below the 10-week moving average on the NASDAQ weekly chart. And again, you've got now the stochastic rolling back over. Are we confirming a lower high? We'll be watching to see, do the stochastics in the weekly time frame roll over by the end of the week here? Of the CPI data, we still have the Bank of Japan with their potential rate hike. What do we look like by the end of the week? What do we look like by the end of the month as we move into the holidays here? We're confirming a lower high on the NASDAQ with the MACD rolling back over here. Does it go negative? Do we take out the cloud here and the 100 period now that we're holding below the 50 period moving average? Can we stay below it? Video was up that helped NASDAQ. Again, we still have this potential head and shoulders. We still have the inverse head and shoulders on the 10-year yield. It broke out, it back tested, threw back into the trading range. Again, do we see this begin to play out? If the inflation data comes in hot, we could see this surge. Does the diversions in the weekly time frame begin to play out with the Russell and the Dow move to new highs, back into slamming into the trend lines and turning off of them in the weekly time frame? Here's the Russell weekly chart. Got a triple divergence on the RSI. The MACD's got a divergence. So again, the Russell suggesting something's getting ready to happen. Just back to the NASDAQ, I forgot the daily chart. And again, you've got the potential lower high here. You're under the 50. If you end up flipping momentum back to bullish, you still might fill this gap. If you do, then you get that 2022 scenario. The gap back up here on NASDAQ if it ends up attempting to get filled. The S&P and NASDAQ could diverge from one another if that happens, which again happened at the 2022 top. I've talked about that at great length and detail. So again, I'll be watching. Does the MACD go into the negative region? Stochastics breaking 50 here. Again, does momentum take us down, test the 100 to fill this other gap here, to test our November low?